You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out a little show we like to call around these parts the option block. All sorts of goodness. If you never heard it before, first off, welcome. Secondly, we do a lot of fun stuff here. Talk about what's trading, talk about unusual activity, answer some questions, go deep into some options strategery, all sorts of good stuff peer into the future. You guys know how to join the partay. If you're getting it on your podcast device, just keep doing that. If you haven't subscribed, you're just getting a one-off, make sure you subscribe either directly, or a lot of people like to use our network feed that has all of our shows, not just this show. So it'll keep hitting you throughout the week, not just Monday and Thursday, but all throughout the week with all of our options goodness. So subscribe to that. It'll keep you rolling. And, of course, you can always join us live every Monday and Thursday, noon Central, 1 p.m. Eastern, via Mixlr. Grab that link, set it and forget it, and you can join the party. And if you follow us on Mixlr, you'll get notified the second we go live. Not just with this, but all of our programs throughout the week. If you've been listening live lately, you know we've had a lot of fun people coming in from like the FIA conference and things like that. So you never know who's going to surprise us here in the studio and sit in that chair right there. So subscribe or follow us on Mixlr. It's a fun little boost. Fun little curveball we throw in your day. Maybe crypto, maybe volatility, maybe you never know what the heck we're going to talk about. So grab that link. It's a fun one. And again, hit us up. Questions, comments, insights. We do. Yes, we do. Even if you don't listen live or listen way delayed or on 5x speed, whatever your poison is, we do like to hear from you guys. And joining me on the old program today, unfortunately, Uncle Mike, he's on assignment. His daughter is sick, so he's off doing the taking care of her. I do believe she's in the hospital, actually, so hopefully she's faring well. I think he's off tending to her, so that's way more important than anything else we're going to talk about on the show today. So hopefully she's doing better. But joining me, putting on his talking pants today to do double duty, it is the Rock Lobster himself, Mr. Andrew Giovinazzi, from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the show, sir.
It is a pleasure to be here in the land of the land of the block of options.
The land of the block. I like that. It is a good land, a fun land to be in. And let's flip the switch and head right into the other land known as the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we kind of break down what the heck is trading. A little bit past noon central here, the one true time zone here in the markets. Kind of another one of these days where they can't really make up their mind where they want to go, who they want to be when they grow up. We got the S&P and the Dow off to different degrees. S&P kind of the Goldilocks of the day, off about 0.3%. The Dow off about 0.5%. Tech-heavy NASDAQ on the rampage, up nearly a full percent. So we got a tale of almost three different markets there. And all that mixed means VIX cash is kind of like, I don't know. Shrug on my shoulders. You can see that easily on the audio side there, hovering right around the 20 handle, 1990 or so, pretty much unched on the day as well. Speaking of VIX cash, before we get into breaking down today's and this week's activity, Mr. Rock Lobster, I do believe you want to do some splaining to our audience. You want to come in and make some defense of your pick from a week and change ago for the crystal ball, where you were an impressive 6 handles off. that was good. I think when I told your pick to your cohort there, the meatball, he audibly recoiled. I said 20. He said what? He was like, I slapped him in the face. 26. So if you want to give some nuance, some context, some color around your thought process there, sir, I will allow you to do. I will give you that honor here at the top of the show before we get into today's activity.
Okay, all right. So at the time we had extreme backwardation. So VIX cash was pretty high. I was looking for more of the same, and as fast as it came, it went away for reasons, of course, that I cannot quite figure out. But that was the theme for a couple of weeks, and that might have been the peak given our, whatever interest rate, European tech earnings, Chinese, whatever stuff that drove vol up there. So as of right now, I was totally incorrect. That's all I can say. But, you trade for what you see and you manage risk for the things you don't expect. So the fact that, VIX got smoked didn't really hurt us. It was fine for my vol newsletter in case everybody was worrying. So we're planning for higher vol and was able to sell a lot of our upside, and now we're kind of planning for the downside. So, everything that caused the market, the vol, this is one of my things that I usually look at. If everything that caused vol to rally really hasn't gone away, elevated vol is going to stay. I was way over optimistic on how long VIX would stay at that level. So, at least short term, we're still like a 20 handle, but nowhere near 26 is what I wanted to close on Friday. I think we got a little taste like 21 or 22 last week, but nothing close. And I have to concede defeat, but I'm sure there will be another week where I can handily give you a trouncing in the crystal ball, which I look forward to the next time, sir.
Yeah, one of these days you'll get me. You keep I give you enough tilts at the windmill eventually, right? You will dethrone the king here, but you come to the king, you got to take him out. You miss, it doesn't go well for you.
It's not. You don't want to miss killing the king for sure.
We learned all that in Game of Thrones, right? Many times over. It doesn't work out well if you come for the king and then you screw it up. But I think
miss.
To be charitable, I think you were playing the Russell role on the show that week. There was no one around to guess an extraordinarily, some may say, ridiculously high level of volatility. So you filled that role for him, and I think he had a smile on his face when he heard it, sir. So there you go.
I did. He was happy from London or wherever he happened to be.
Yeah, wherever the heck the tab folks were sending. Ironically, I did see him at the London Stock Exchange event. He was floating around for FIA in Chicago, though, so I didn't get a chance to chat with him. But he is floating around. He does exist. I can confirm that. All right, let's move on from the madness that was that. This week, kind of shaping up to be another weird one, Mr. Rock Lobster. What's lighting it up over there in the pit chat, and what's going on with your various VIX zones of mystery?
Well, we're in Zone of Mystery 3. Still close to that Zone 4. Remember, my pick last time was that we're going to stay in that Zone 4 for a while. That was I thought we had plenty of movement. We were getting a lot of busy days. Definitely didn't materialize. But you see something like the Qs are up a little under 1%, and the SPX is what, flat? And VIX is, I'm going to just call it unchanged on the day. The vol futures are a little bouncy. So really there's just weird cross currents. And I think part of this is, this is what a stock market used to look like before we had 8 years of QE. Remember the BTFD, buy the effing dip all the time. And now, there's not going to be any more interest rate support. There's no reason. The U.S. economy is booming by all, I'm sure people on all sides of the aisle will argue, but it's still, it's hard to deny that it's not going well. The biggest problem is G7 deficits and debt and stuff like that, which the Italians just happily reminded everybody of last week. So that was probably the thing that helped throw everything over. As of right now, looking for all the big tech stocks to see if technology can regain some of that luster. You look at some of the things like NVIDIA was almost $300. I was laughing with some of my students. I go, okay, so you fly up the 300 calls and buy a put, and we thought that the fly would pay and the puts were just great stupid protection, and the puts ended up being like $20 in the money. So when the vol's this high, you just you don't know where things are going or how far things will move. And I still think we're kind of in that area. You have to be careful with vol this high on what you pick, but once the tech earnings come out, if that's not our upside catalyst, if we really don't start moving higher, then I'm in Mark's camp on then we're probably going to see just kind of a slunky downside market. And the last thing is just the elections. I think the fact that the elections are there matter just because it's a date on the calendar, and it is an unsettled thing. Nobody knows. Is it going to be all impeachment all the time, and nothing really happens? Is it going to be gridlock? We kind of rally into gridlock. What's going to happen? So, and when people don't know what's going to happen, it's more volatility. And at least right now, that's what we have. So, but tech stocks are trying to get off the mat. We just haven't seen any great earnings as of yet. I believe eBay earnings came out and they weren't very much to write home about. I don't even know if I'd call eBay a tech stock anymore. It's just kind of I think it's just a utility. It's it's a buy and sell utility.
You can buy all the Pez dispensers you want immediately via eBay.
Exactly. So that's where we are. We need some good earnings. Netflix had good earnings, but a slight fall from grace. Most of the bigger tech stocks are down at least 10 or 15% from the highs, except for Apple. Apple is still very, very close to its all-time highs relative. What is it, down like $5 or $6? So it's not very much, 2 or 3%. Amazon's more like 10% from its highs. So I think really ultimately we're looking for that continued earnings growth in technology. And if we get it, you'll see the Qs back over into the mid 280s again, the mid 180s. And we need to see that. All the bank earnings were pretty decent. So we got like zero rally out of the XLF. It's sitting doing nothing. So I think it's wait and see. There are just some stuff on the calendar. There's not enough benign action for people to really jump in with both feet. So, and that's what we have, and it doesn't look like it's going to change anytime soon. And the Europeans never help with, okay, we're going to pass this stupid budget, and then the ECB is going to fight with them, and it's still a problem with the whole EU system. You still have all these little rogue countries, deciding, we're just going to not do that or do this, and and the ECB will pay for it. And I think they're definitely trying to quell that at this point. So we'll see how all that goes. But for right now, it's like strange instability on top of good earnings, or so far decent earnings. And then we'll see if the tech earnings lift us. But if the tech earnings don't lift us, it could be kind of a downer to a nothing year for SPX, which it's been a while, but a rest is probably not a terrible idea.
Yeah, we're in this weird kind of malaise right now in terms of what's going on in the market. It can't really find a direction, with the exception of the Nasdaq. It seems to want to move aggressively every day in a different direction. Sometimes, regardless of what else is going on in the rest of the marketplace. You mentioned earnings. You're right. The season is we've already had 15% of the S&P 500 names reporting. It seems like a lot for so soon. It seems like the season kind of just kicked off, but we're already well into it. Of those, 83% of that, so 83% of that 15%, a subset of a subset, have topped their analyst expectations. Again, we kind of take a dim view here on analysts, but that means maybe I'll have to look at all the numbers I haven't seen. Maybe a lot of them outperforming on the straddle end, which is where we like to come in on the vol side. Speaking of earnings and straddles, we got some new numbers here lining up for you this week, courtesy of our friends over there at ORAT. So you can go check them out at theoptionsinsider.com. Just look for the earnings move reports coming out. They break down all the good stuff. Spoiler alert, if you're waiting for the stuff later on in the week, like the Twitters and the Amazons and whatnot, all the big names come out on the 25th. Those come out a little bit later in the week. Matt and his team like to crank through the full panoply, give you all. So even if you're trading some of the more esoteric names, like HAS, for example, or perhaps HAL, those names, they are all broke down for you as well in some big names. They still have popping up over here. Jeff Blue here coming in on the earnings report. Looks like they're trading about 16.5. They're pricing in about 83 cents. In the past, they've moved around 70 cents. So a little bit extra juice there coming in this time here. Also got Caterpillar. They're popping off on the 23rd. JetBlue was on the 23rd as well. These are both before, so get them in if you want to trade them today because they're popping off before the bell tomorrow. Caterpillar, they're trading around $130. They're pricing in about $6.50. In the past, they've moved about $5.25, and actually they've priced in $5.25. They've actually moved $4.35. This one actually looking a little bit juicy compared to previous straddle runs here, previous quarters. So maybe something to keep an eye on. There's a bunch of other names. There's literally hundreds that they go through here. So if you have a ticker you're looking at and they're popping off in the next couple of days, chances are Matt and his team over there have done your due diligence for you. So you don't have to. It really is an impressive amount of data that you guys get for free. Big research clients used to pay a lot for this. And even if some handful of houses that did it, there weren't that many. And now you guys get it just by coming to our website or heading on over to the ORAT's blog and checking it out over there as well. Kind of cool of them to keep providing all that stuff for you guys quarter after quarter. You mentioned the midterms, Mr. Rock Lobster. Something we talked about a few times. We've also kind of talked about, doesn't seem like it's really still, it's kind of a known unknown out there. So there's a little bit of interest in it. It's something to keep an eye on. Everyone's kind of been pointing to that. Maybe that'll be a driver down the road, but we haven't really seen a lot. I think our buddy here, Sakib, turns into the shows quite a bit over there at Reuters. Also, I believe he's the one who ran with our story on the whole Tesla puts, kind of all that fun stuff. He did an article I think recently showing, looking at a bunch of different metrics and running the numbers and saying midterms kind of not really maybe the driver a lot of people were hoping them to be. He actually looked at the shape of the vol term structure. Good for him. And he's saying it hasn't really shown him there. He talks about the 1 month vol in the S&P, which we always talk about there on good old vol views. At the time he wrote this, it was about a 17. He says the last 8 midterms, it's averaged around a 20. So we're obviously still not even at that level. Of course, midterms still a little bit away, but he also looking at some of the options paper out there and not really coming across, at least his metrics here, not really seeing a lot of things. And I could kind of anecdotally corroborate that. We haven't seen, we've been talking about midterms, but we haven't seen perhaps that big push of paper or that big development out there. I don't know. Is that something you've been kind of, you mentioned earlier, Mr. Rocklow, is that something you've been kind of been noticing as well? Is that, people kind of mention midterms a lot because it's kind of a big, like I mentioned, it's a known unknown. But outside of that, there aren't a lot of drivers people can really point to for what the hell's been going on lately. So maybe is midterms maybe not shaping up to be the thing some people were anticipating it to be, sir?
I think right now there's a small vol blip but not much. So I would say the only thing that makes it's one of those things that where the vol will build sort of. I think of it as kind of like an earnings strangle, where you look at, let's say, the November 07, the day after the election, right? So you have options expiring on the 7th. So you look at the 276 strangle is $8, and it's trading at about 18.5 vol right now. So you look at that strangle at $8 and say, okay, well, how worried are people? How is it going to decay normally, or is it going to decay a little less than normal? So at 18 vol already, I can't imagine the value of the straddle going too much higher than $8. That's pretty juicy for less than a month away. So I think there's some pretty big dollars in the straddle already. I wouldn't see the actual net price of the straddle going up a whole bunch unless something really funky happened. And that's the easiest way to keep track of what's really happening. So I would expect it to decay a little slower than normal. So liquidity providers would probably slowly beef the vol up. And what do you think that straddle is going to be worth the day before the election? Probably, I would guess $4, something around there. So that's a Wednesday. It's a Wednesday settling straddle, and the SPY. I think on Monday it'd probably be worth about $4 because that would be about a 1.5% move in either direction, which could happen easily. So we'll see how that plays out. I don't think there's a huge risk in owning that term and then selling some of the more near-term stuff. So that's a trade I'm trying to figure out from my little vol newsletter, how that prices, because there's some pretty juicy premium now in the front month, although we're moving a little bit like wildfire. So that's a way to look at that. It's not near as much, I think, as the 20, the Clinton Trump election in 2016, where we kind of had that ramp really hard into the election at the end. If you went back and look at that 2 weeks or 3 weeks before the election, I think VIX was like 14. It was not that much. I'm actually going to go back and take a look at the historical price just to make sure. But I'm pretty sure that October of 2016, I'm going to say right around, let's call it the 18th in 2016, October 18th, 2016, the VIX future was 1565. And the cash was around $14. So we're a full 5 handles higher than we were going into that election. We're a full 5 handles higher now in VIX than we were then. So, and vol started to increase into the election because, like I said, it's more like an earnings cycle where the vol will be a little pumped up, and then time will go on, and you'll see if kind of how that straddle decays. Does it decay faster or slower than normal? And we're in that right now. So it's not. I think more of the market is like vol sort of in this holding pattern where I think you want to own the election cycle premium, and you want to sell the crap out of everything in front of it. I think that is the vol trade. You don't, just saying vol is high or not relative. It depends on how all the news and all that stuff comes out as you get into the election. I mean, it's rare going into an event that the vol will tank prior to. The only time we saw that was Brexit, and that's when they thought it was a total lock that Brexit was going to happen. And if you take a look at that vol chart, you had the total collapse in volatility, I think, a day before. And we had that 5% gap down or something that morning after Brexit. So you can look at the early vol, but I think that's where the trade is.
People could write treatises on how not to trade event risk around that. Remember, we even talked about on the network. We're like, wow, these people are really not reticent at all to crush this vol off of, I believe at the time it was like one phone poll that had been done in the UK that showed it was not happening. We all said they're putting a lot of stock in this one poll. We've all seen how well that goes in the U.S., putting a lot of stock in polls. And they were just hammering that vol going all the way into, I believe it was like a Wednesday, wasn't it? A Wednesday night or something. And they were just crushing that vol the whole beginning of the week. We kept saying, what are these people doing? This is still a huge unknown out here. And they're making it sound like it's like the event they hit it like the event had already happened. Like all the gas came out of it, and then those people got wiped off the board. It was just if you're out there, you're a doctoral thesis student in financial mathematics, or just want to learn about options trading and how not to trade an event, Brexit is just a perfect. That still stands up there. It's just, I remember the time it's being like, we see a lot of weird stuff, but that was bizarre and it made no sense. And of course it did not work out too well. So yeah, you're right. I don't foresee Brexit style crushing of that would be impressive if that starts happening. Then that might be interesting to watch, because that could signal all kinds of other madness afoot post midterms. All of a sudden all bets are off then. Speaking of all bets being off, let's keep on rolling, see what bets we can put on, some new ones perhaps, with a little bit of the old odd block madness.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, Odd Block time. Time to kick it off with the weird, the wild, the wonderful, the whimsical. No name encapsulates more of those. And also just straight out downright bizarre than Tesla. Right now hovering a little bit shy of the 260 level, 257.5 or so, off about $2.50, right around 1%. So kind of bucking the NASDAQ trend. NASDAQ up 1%. Tesla doing its own thing, as it is wont to do sometimes, off about, just ticked a full percent to the downside now. So coming in a little bit. When downside lights up, these puts are probably lighting it up too. Our old friend, the mystery puts. The 50 strike is where we start in Jan, which still remains the top of the heap, king of the hill out here in Tesla options positions. With 75,506 on the tape right now. About 127 hitting the tape. Mr. Meatball, Mr. Rock Lobster. I'm sorry, I don't mean to defame you. I was talking with some of our listeners who were writing in recently, talking about how they're trading these things now too. And then we were just kind of talking about, what they're looking at, and kind of the joke is that, you think Tesla's going to go to 10, but we all know, or 50 in this case, but we all know that these things have a life of their own. They have a Vega that is quite impressive. And these things will move. They've doubled and tripled. It would be an interesting feat to go back, Mr. Rock Lobster, if someone has more time than I do, to look at the data and see how much these puts have moved and maybe back that into an approximate delta. That'd be kind of interesting, wouldn't it?
I think it would be a funky volatility delta.
Yeah, vol delta, because these things move. These things move like crazy. So, we always laugh. People who always look at it just purely from a delta perspective, that might help them put it in context a little bit more and look at this and see exactly what the Vega and these otherwise kind of meaningless puts. These things have gone from 30 cents to $3 to back down now. They're trading around 81 cents, 89 cents. These things are all over the place. You think they were like a 25 delta, if you weren't paying attention to these things. So that might be an interesting exercise for someone out there who's willing, who's got the time and access to the data to what that Vega backs into in a historical vol delta. Would be kind of a fun number. Right now, 127 of these bad boys on the tape trading, like I said, close to 90 cents right now. 150 of the 25 puts lighting it up. Those are about 11,000 on the tape. Those are trading about a quarter. And 80 of the par puts with about 48,000 on the tape. Those are pushing $3. Let's go a little bit farther out here to Jan 2020. I think that's where some of our recent listeners are playing. They were going a little bit farther out. And not a ton lighting it up, except for the 10 puts out here in 2020. The 10 puts putting $1.50 on the tape. Those things, Mr. Rock Lobster, in case you want to market on the 10 puts in Tesla in Jan 2020, 53 cents at 80. That's a little wide for these things. Pretty much 40%. Of the value of the option in the spread right there. 100 not stopping them from trading. 150 on the tape. Almost 8,000 open so far. Let's see where these things were printing today. If I can get why can't I get a last here? I don't get a last here for some reason. But yeah, 60 cents. They've traded for 60 cents. So yeah, somewhere coming in, splitting that middle, but still fancy stuff out here. Mr. Rocklofts, have you guys bit the bullet yet on the Carmen line? Loaded up on some of these? Let's call them the vol delta puts.
Yes, the vol. So just so the listeners can understand, they're like, okay, why do these guys talk about the Greeks and all this stuff on? So the Jan par puts have there's 10 Vegas per contract or 10 cents a Vega per contract. So the vol moves up 1 point, and that will gain $10 a contract for the put. But there's only 4 deltas per contract for that same par put. So 1 point of volatility will move the put more than a $2 move in Tesla. So they are real sensitive to a change in volatility, which is what Mark was just talking about. So once you understand what makes an option move, it's a lot easier. So we do have a butterfly on in there. Basically, it was a no-cost fly, and if Tesla plummets a little bit, we might get a little pop or action out of it, and then we just close it. So hasn't really happened enough yet to make it worth it. So we are just sitting, spectating like everybody else. But the fact that the stock still defies gravity like it does is, I think, quite amazing. And in a testament to the marketing, if there's a better guy that can market than Elon Musk on the planet, let me know, because it's pretty impressive.
Yeah, the hyperbole goes a long way, in this case into evaluation. Now the fact that I just said that, all the Tesla Defense Force will come out en masse. But Mr. Rock Lobster, when you think Tesla, the next name, of course, on everyone's lips is EnLink Midstream Partners LP. I knew it. I knew that's where you were going. I beat you. I see. I can read your brain waves across the connection we have here. Ticker symbol, of course, everyone knows it. ENLK. Trading today, about $18 off about $17.93 to be precise, off about 33 cents or nearly 2%. This is a name that does a whopping 517 contracts a day. Today, doing about 6,200, 115 to 1 calls over puts. So naturally, check out those puts, see what's going on out there. Of course, our eye of Sauron was drawn inexorably to these Nova-19 calls. That's pretty much where all that paper went. 6,094 of those going up here today, including a big block of 6,068 paper coming in, and looks like crushing the bid. They were pretty wide at the time. They were a dime at 35 cents. Coming in for 15 cents, 6,068 times. So it looks like paper probably selling those. Again, this is opening. There's no real, it's about 1,000 contracts, but not enough to cover this lot here. This is, let's see, their earnings are on the 6th. There is worth noting there is a divvy on the 26th, but this would be a strange way to play a div play with out of the money calls with no OI. If they're doing it this way, they're doing it wrong. So don't do it this way if you want to trade div plays. But yeah, 6,000 and change of these bad boys. They're a dime at 20 now. So someone coming in, let's see how much size is at 20. Not a ton. So it's not like he's sitting there with more to go at 20 cents after selling a bunch at 15. Looks like probably a bit of the old overwrite. Let's see here if I can look at this chart. Whoa, this chart is all sorts of crazy. What's going on here with my charts? There we go. Let's go to the underlying, please. I don't know what the heck that was. That was crazy town. All right, here we go. All right, a year ago it was trading a couple bucks shy of where it is right now. It was trading about $15.83, so about $2 shy of where it is right now. Got up to 18.5 bucks back in January. Hit that level again back in June, and then recently it got up to over 19 back in September. So it's been testing the upside a few times. Every time it seems like it's retraced off that level over the course of the past year. So looking at this chart, Mr. Rock Lobster, the 19 level isn't too terrible of a level because it seems like it can't really break through that. So if you're a stockholder, an underlying holder, letting it go at 19 wouldn't be the worst thing. And if not, getting 15 cents 6,000 times for the privilege, not the worst thing either, Mr. Rock Lobster. Are you on board with that, or you think there's some other tomfoolery afoot here, sir?
Once again, just the writing of options for a dime or 15 cents or whatever, it never makes any sense to me, but it might generate somebody a couple extra bucks, but they certainly crushed what's left of the life out of those options. Now they're 10.35 and nobody really cares. What's interesting, okay, I'll just say I'm just looking at sort of the, I think I'm looking at the volume here. There's not a huge amount of, I don't think there's a huge amount of liquidity on the offer even. So this is a strange one as far as are they really just blast them out, or it's odd. I'm just going to say it's kind of odd paper, although I can understand why they're selling them. They want to make 1% for the month, or close to 1%. I get that, but this has all the, these LLPs. How many of these buy rates have we seen, over and over and over again on these names, where they just write the crap out of the upside option and they take their divvy and they're happy. So I would assume it is more of the same.
Yeah, I was surprised by that as well. I thought once he crushed it for 15 cents that 20-cent offer was him lurking out there for a lot more, right? That there was size at 20, and it doesn't seem to be that way. It's just a bunch of 10 lots. So yeah. Unless he's hiding somewhere out there, I don't know. He's got more to go. You got at 20, I'll hit you. I'll fill you. But yeah, I thought for sure he'd blast, hit it at 15, then be parked for 20, and let people come get him. And no, not seeing that. So you're right. That kind of surprised me a little bit as well. I thought there'd be more to go. So apparently not. Maybe he's 6,000. He only wants 90 grand, Mr. Rocklap. He doesn't want to go for 100. He wants an even 90, and then he can go about his merry way. 90 grand a month. There are worse things.
Yeah, I mean that's not bad. You could live on that.
Especially in Maine, you could go pretty well on 90 grand a month. I think in the land of Maine, you could buy a second stoplight for your town. Be a 2-stoplight town. Imagine that. All right, so we're talking. You're talking ENLK. The next place we have to go is MLNX, or actually the technical name is the actual name is Mellanox. The ticker is MLNX. This is Mellanox Technologies Limited. Ticker symbol MLNX, MLNX. Trading today $72.16, up about $1.50, or about a little over 2%. So this one lighting it up today. This is the name that does 385 contracts. These are some good odd block names. I like the ones that do a couple of hundred and then they roar to life with some big print. That's kind of what the odd block was designed for. Today, doing, like I said, 6,400, 5.5 to 1 puts over calls out here. Pretty much all that paper coming on the Nove 65 puts, including a big chunk of about 3,500 going up. Paper coming right off the bid. Again, these are another wide one. Again, that goes to show we talk about liquidity being kind of fragmented. Once you get about beyond the front one, that the money Apple gets a little wide. These names you're talking about here are good examples of that. I talked about the Tesla puts even being 30 cents wide. Those other puts being crazy wide. These were 85 cents at $1.35 when this trade came in. Someone blasting out, looks like about 3,500 of them for 95 cents, or a dime off the bid. They got a little bit of price improvement on there. Again, total of about 5,000, 5,200 going up on the day. Only 6 contracts open, so this is all open in paper. Mr. Rock Lobster has a bit of a whiff, the air of some of your old famous line in the sand puts to this. But let's look. Let's do a little bit of looking here to see if perhaps that makes sense. Look at a chart here for the last year of Mellanox. Sounds like a sci-fi bad guy name. I like it. $43 it was trading a year ago, so about almost 30 handles below where it is right now. So this thing's kind of been on a tear over the last year. Got as high as $90.50 back in June. Then it's kind of been slowly making its way off that upper bound, getting down about 20 handles now to where it is, right about $72. So still well north of where it started the year, but off its highs. So Mr. Rock Lobster, these could be, if these are what they look like, opening line in the sand puts, this could be a fair bit risky, because there is room on the downside for this thing to run. It could easily blow past those 65 puts again and leave a mark. If you're wondering what this is a fabless semi company. So it sounds like it's a pharma or a biotech name, but they're actually a fabless semi company. And we know the semis have been kind of moving and shaking this year. Mr. Rock Lobster, I know you love your harvesting of premium. 15 cents makes you a little bit concerned. 95 cents maybe a little bit better. But then again, drawing a line in the sand where you could foreseeably blow 20 handles through that is an interesting one, Mr. Rock Lobster. What's your spidey sense telling you here?
This does feel like line in the sand puts. I'm just looking at it right now. In the 90s, back when you were a youth,
back
all
when
of
I was
these
6.
little tech. Remember, like the little tech fabless, Kramer used to have. There's trends in fabless semiconductors up and down, and they just go rallying. They just head to the moon. And then they would just, and then all of a sudden there's this cyclical slowdown and they all become sad and they crush them. And this looks like one of those, one of those types of companies where it trades at a high multiple. I'm sure they do really great things and they make money, but it trades at a pretty good premium, like, I guess Netflix, or not Netflix, but NVIDIA and all the other ones do. So it is not cheap for an industrial company. So I think somebody is pulling the line in the sand routine at $65, and maybe that's where they think it has value. But, and it's not a crazy market cap either. It's $4 billion, but it could easily be worth just $1 billion, not very fast either. So, but it does look like some kind of line in the sand where somebody's getting pretty giddy on this bad boy.
This guy's getting giddy to the tune of nearly $500,000 if all 5,000 and change are him of these things. So again, wants to pocket a little bit more than our other friend who was content with 90 cents. This guy wants to get about $500,000 a month. Probably do pretty well in Maine. We could buy a whole street full of stoplights for that out there in mainland. All right, let's wrap it up here with our old friend. I've talked about this one in a long time, Hog. This is, of course, Harley-Davidson Inc. Trading today, $38.89, off about 70 cents, or about 1.7%. This is the name that does 3,178 contracts a day. Today doing almost over 10x that, actually, 33,749, almost 2-to-1 puts over calls. A lot of this coming in some October, expiring on the 26th, so we're talking weeklies here. Looks like a risk reversal, or maybe more of a collar, because risk reversal, you think these sound like people think the other way. Looks like it was the OC 36 expiring on the 26th, not monthly OC. 36 puts against the 39 calls, coming in 3,387 times this morning. Looks like paper lifting well through the offer for the puts for 53 cents, and then crushing below the bids. So maybe a bit of a late print here for $1.33 on the calls when they were $1.57 bid out. So interesting. Obviously, these things are probably done tied, so they're making it up or giving it up somewhere else on the stock print probably. So yeah, doing the whole thing for about 80 cents here. Looks like they're collecting here 80 cents because those calls are at the money. As the day wore on, let's see a total of about 4,000 and change. Also, those are all opening. Both of these prints looks like these are both opening. Looks like also worth noting. There's about 2,800 of the 37 puts going up in the weeklies, and 5,000 of the 40 calls also in the weeklies. So it could be potentially a 39.40 vertical, as well as but 36. That's not enough that'd be a weird ratio here if it was a 37.36. And if he's doing it for a point, that's kind of tight. But again, it is the weekly, so you don't have a lot of room to play here. But on the surface, the initial print we saw was what looked like a bit of a collar here or a bearish risk reversal, if you are so inclined here, in Harley-Davidson. Going out this week, it's the 39.36 collar here. Let's see. A year ago, this thing was trading 48, almost 40, actually over $49, so pushing 50 a year ago. Got as high up to about right at the end of January, 52.5. Funny how so many names hit their apex right around the end of Jan. What happened in February? Who knows? $52.5 here at the end of Jan. Then it kind of dropped back down to pretty much where it is right now, $38.91. So we're on the low end of this. Mr. Rock Lobster, looks like maybe someone concerned. We do have earnings coming out tomorrow, so this looks like a bit of an earnings play here, Mr. Rock Lobster, in which case someone perhaps got some shares and he's a little bit spooked about some downside and putting on this collar. Is that what you're feeling, sir, as well?
Isn't it feeling a very collar-esque action? There's some volume in this out of the money stuff. So isn't Harley one of the ones that, like the tariffs hurt? I can never tell if the tariffs are supposed to hurt or help a particular company, but it is feeling a little collary, stock protecting, but kind of closest to the money on the 30, on that 9.6 strike. It's kind of an aggressive. It's feeling like a very aggressive collar if it if indeed it is a collar versus stock. You know, you put on that position and you're like, I guess my first thought is why, you know, why do you want to sell the 9s and buy the 36s unless you really want to be short? So, I would say an aggressive short, to be honest.
Yeah, he could definitely pay for a little bit better protection if that's what he's looking to do. I mean, he could move that up a lot tighter if he's selling the 9s. I guess he doesn't want to protect that much. He's willing to stop himself out at 36, not a little higher. Yeah, so that's a weird one. The only thing that gives me a little bit of pause is there's 5,000 of the 40s going up as well. That could be related to later on print. That is opening paper there as well, which that would be kind of a weird one. Maybe he's got a he's opening up for more on that. Those are trading about $1 though. So you're not exactly giving those away either. So if he did all this whole thing for about 80 cents, then to pay $1 for those, that would be kind of weird as well. But again, they don't call it the odd block for nothing. I'll let you guys look into that as we keep on rolling. We got to keep on rolling and get a little bit of your questions hit, and it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Mail block time. You know the drill. Time for you guys to take the reins. Let's pay off our last week's question first here. We asked you guys questions a lot here on the show, too. Last week, we asked you guys to bust out your crystal balls and say, where do you think VIX was going to close on the Friday? And again, you guys were pretty mixed. It was pretty much even across the board. The winner by a slight margin was my range, a 17 to 18.99 range. We know that VIX cash did not actually go out there. Let's pull up the exact print so Mr. Rock Lobster can feel better about his fantastic prognostication here. There we go. It was, we closed at 1989, so very close to that range, a little bit outside of that range. The actual winner was the 19 to 22 range, which 24% of you chose. 24% of you also choosing higher, north of 22. 23% saying even lower, south of 17. So the winner by a slight majority, 29%, was that 17 to about 19 range there. This week, we'll ask you guys a little bit, maybe a little easier questions, more of a personal preference, what you're trading. You don't have to do advanced analysis. We know that's hard for the Rock Lobster, especially when it comes to VIX land. We said, hey, earnings are back. Big tech names on the docket. Which ones? Just a very simple question this week. Which ones are going to be lighting up your personal options trading this week? Give you a little bit of bonus if you want to chime in with how you're going to do it. If you want to chime in with, hey, I like to do call verticals or flies or whatever floats your boat out here. Gave you 4 names to choose from on the big tech day coming up this Thursday. Got good old softy, Microsoft. You got Amazon. You may have heard of it. May be familiar with that one. Alphabet, a.k.a. Google. And we got the Twitter bringing up the rear there on our list. Mr. Rock Lobster, let's go to you first, sir. Do you have a preference of the 4? I know you don't trade earnings, but if you were so inclined, which one do you think it would be? And then also, more importantly, what do you think our audience is going for?
Wow, that's a good. All these straddles have gotten much more expensive. So I'm going to say the audience loves Amazon, so they're going to go with that. But the stock that has regularly underperformed the straddle has been Microsoft over the last, I think, 8 or 9. I don't know, not even. No, more than that. Like the last dozen quarters has easily outperformed the straddle. So right now, the earnings straddle is $5. So I mean, it's definitely a lot more than it used to be. There were times when it was not more than a couple percent of the underlying value. So now they're at least giving it around 5%. So, which I think is probably about fair for Microsoft. But I would prefer actually Twitter of all of those if I was going to trade one, because that Twitter has definitely been moving around quite a bit. It was a $48 stock not very long ago this summer. So I think there's potential for it, but you know, it is not the cheap earnings straddle that you used to be able to buy. Last year, you could buy a 1-month earnings straddle for a 48 vol. And now with the stock trading around the same price, those earnings straddles are now more like an 82 vol. So everybody figured out my little game on pricing all those, fully valuing some of the tech earnings straddles. So tough trade now, but I think everybody's going to go with Amazon. I would go with right now. Twitter at, oh my gosh, that's a lot more than it used to be. I would go with Microsoft right now, though, myself. If I gun to my head, that's what I would pick.
So you chose 3 out of our 4.
No. Microsoft for me, but the folks are going to choose Amazon.
I'm giving you a hard time. That's what I like to do here. But good guesses there. I would have probably, if I had to guess initially what the audience was going for, I would have said Amazon. But they're number 2 with 29%. Number 1 is actually Twitter right now. With 36%, that kind of surprised me. A little bit of love there for Twitter. Maybe they're feeling what you were laying down there, Mr. Rock Lobster, in terms of Twitter. Twitter right now trading $28.88, up a whopping nickel out there today. Doing, let's see, it's averaging 120,000 contracts a day, 65,000 on the tape, so it seems like pretty much an average day, slightly up right about halfway through the ADV, right about halfway through the session, a little bit more, so not a lot on the tape as of yet, but they're coming out usually before the bell on Thursday, as opposed to a lot of the others coming out after. So bear that in mind if you are slinging yourself some Twitter. Number 2, Amazon. Number 3, Softy, 19%. Number 4, Google. You got the rest of the week to chime in on this one. We also like to hear from you guys if you have a particular way you like to do it. Mr. Rocklofts is talking about, straddles and some vol trades. Maybe you like yourself a good vertical. Whatever floats your boat, hit us up. We don't judge. Well, we do a little bit, but not a ton. Rock Lobster does. Me, I'm a nice guy. I just judged him. All right, let's see. Let's try to squeeze in some listener stuff here. We got a comment. This is an interesting one, Mr. Rock Lobster. We kind of talked about this on our Twifo show. I think, mention this one here as well. This comment came in from Kelly Lef. And she or he saying they thought the user tip to exercise deep in the money calls to save on a spread was a good one. So they checked a few of their stock replacement positions that had gone in the money. Turned out the spreads were fairly similar to the spread on the underlying stock index. Well, go figure. I think they meant so any savings were pretty small. Not really worth the hassle to go through the exercise process. Maybe I'm just trading a more liquid index than that listener, or am I missing something? No, I think you're on it. They're not going to. What you're trading at that point, deep in the money call, is effectively the stock or the underlying, whatever the underlying you're trading is. So the spread should be somewhat commensurate with that. Again, if you're talking some crazy illiquid thing, it probably will be a little bit wider, and that's probably what I think our earlier listener was referring to. Mr. Rocklofster, we had an interesting suggestion on one of our other shows about if you have a name. We talked, for some reason we got on the subject of early exercise. I don't know how, and listeners were running with it with all sorts of comments and suggestions. And one guy wrote in with, if you have a name that's deeply illiquid, and if the spread's super wide on an in-the-money call and you have it, you could just exercise it and then split the uprights that way without having to go through the hassle, and that could actually save you some money. I thought that was an intriguing idea we haven't really discussed before here on the show. Is that one you have in your arsenal, sir, for all your early exercise moments, which I know are legion?
You could always exercise an option if the spreads are ridiculous and just get whatever the closing price is. That's not a bad thing. You just want to make sure that you're not giving away any time premium when you do that. And people exercise for dividends all the time. I got assigned on some in the money puts in the SPY on Friday, or I guess last week, an early exercise. So it happens all the time. And liquidity is a factor when you enter a position. So unless you're planning on doing the Warren Buffett and holding it forever, liquidity should be a factor in and what you're going to get around expiration on any trade. So that's one of the little trade tips that I give, people at Option Pit. So it just matters because you got to get the heck out eventually, or you're going to stay in forever. Those are your two choices.
Got to get out. Yeah, we always say, never do it unless there's like a divvy to pick up or something, right? But this is one of those weird edge cases where you could actually make sense. Even if there's like a nickel bid on the put, it still might make sense because that spread could be super wide, and you're willing to forego that nickel to save yourself maybe $5 on the spread or something weird. So yeah, this is the weird edge case. It's not going to apply to 99.9% of the people out there. But we always talk about there's no real reason to exercise your calls. This could potentially, except for divvies, this could potentially be another weird little aberrant scenario to add to that list. Now let's keep on rolling into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block and see what's on our trading screens. I mentioned earnings at the top of the show. I mentioned the big names coming out on Thursday. Of course, Amazon, Alphabet. You got Intel after the bell on Thursday, Chipotle after the bell on Thursday, Twitter before the bell, Southwest before the bell. There's other names coming out this week. Even today after the bell, we got TD Ameritrade. We've got tomorrow after the bell, iRobot. Don't talk about them a lot. That's kind of fun. Before the open, Cat and McDonald's, 3M, Verizon. You may have heard of a few of those. Our old friend Harley-Davidson there as well. We'll see how that collar kind of plays out there. Noodles and Company after the bell. If your kid likes mac and cheese like mine does, you know Noodles and Company over there, as well as you got Visa on Wednesday. I'm sorry, is Microsoft maybe after the bell on Wednesday? I may have misspoke there earlier. Nokia before the bell on Thursday, and we got Goodyear, Aon, a bunch of names, Moody's on Friday. So it doesn't matter which sector you're interested in, which space. If you're an earnings head, a diehard earnings fan, you got Logitech after the bell today. If you like PC peripherals, all sorts of names popping off this week. So you got to pick your poison this week. It is an interesting week. Mr. Rock Lobster, any of that on your radar? And what's going on? Are you watching them there? VIX Zone, sir?
I'm watching the VIX Zone, and I'm waiting for the big tech. Is it enough to kind of get us out of this malaise? Or are we just going to kind of slink and sink down for the foreseeable future? So, that's the biggest thing on the radar, I think, this week, because the jobs numbers have been good. Most of the general economic news has been okay, except for everybody worrying about, China. And I guess the tariffs are having some effect, but we haven't gotten a resolution for that. So I think when the dust clears on some of that, maybe we could see higher numbers later, and Tucson could say his favorite saying. But I hope his child gets better. He's in the hospital. That's no fun.
That is no fun indeed, sir. But you know what this whole episode proved? We don't need no stinking Tucson. We could fill a whole hour, you and I, just talking weird Tesla puts and all sorts of other crazy nonsense. No, we're kidding. We love Uncle Mike. Hope he's back soon. Hope all is well in his neck of the woods. Give him some love while he's out here. Make him feel better. Head on over to stcharleswealth.com. Click on the Fox. At this point, it's got to do something cool. I've been touting it for so long. Get the fun Easter egg. Click on the Fox for added extra 5% on all of your put rolls this month. Check it out, stcharleswealth.com, or hit him up and Tucson at St. Charles Wealth. We'd love to hear from you guys. See what you have going on. He'll even travel across the country to talk to you, like he did at Duke the other day. So he's a happy-go-lucky guy. You can get him out of St. Charles every now and then. So hit him up, stcharleswealth.com, to learn what he can do for you. And Mr. Rock Lobster, I want to know, what can you do for me? That's really what I want to know. It's all about me. What can you do for me, sir?
We can do all kinds of stuff at Option Pit. We will have our next Saturday class coming up on November. It's the first Saturday of November the 3rd. So we're going to teach you all about weekly options, and you will learn the powerful secrets behind weekly options, so you can actually trade them and figure out a way to make money.
That's a good thing, to make money if you're trading. Otherwise, you're just kind of wasting everybody's time and a lot of your money. So don't do that. Head on over to optionpit.com to learn how to do just that. If you have suggestions for what he should rename his VIX zones to, hit him up, Andrew at optionpit.com. Let him know your thoughts. What do you think about his T-VIX, his slams? Hit the man up. Give him some love, or anti-love in that case. Let him know. Andrew at optionpit.com to let him know. And on behalf of the Greasy Meatball, actually, no, that would be the other guy. On behalf of the Rock Lobster, both food-based, easy to get them confused, and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in such great questions. We love them. Keep them coming. Keep voting in all of our fun polls. We like that you guys enjoy those, so we keep doing them. If you have a suggestion for what you like us to take the pulse of the options world on, hit us up. We're open to them. We like those things. And otherwise, stay tuned to the network and to the Mixler feed, because we'll be doing fun stuff throughout the week. And then we'll be back with this show again live on Thursday, noon Central. So we'll see you then for more of the Option Block. The
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.